In this video, I'll be documenting my recent stock purchases as well as the monthly and all-time performance of my portfolio. I'm primarily a dividend investor, which means I prefer to invest for dividend income rather than capital growth. Seeing my average monthly dividend income increasing month by month is what keeps me motivated. Each month I get a little bit closer to my first major goal of becoming financially independent, which is defined by having all my essential outgoings covered by passive income. I drip feed extra cash into my account each month, no matter what the market is doing, and aim to invest around £1,000 per month. All dividend income is reinvested, and on top of that, any income generated by this channel will also be going straight into the portfolio. I've been documenting my progress since day one with complete transparency in the hope that people can get a feel for how things progress under real world market conditions and not by simply using a compounding calculator online. All investments are made within a stocks and shares ISA, so that any profit made is 100% tax free. If this is something that you might be into, then consider subscribing so you don't miss out on regular updates. The content of this video should not be taken as financial advice. I'm only sharing my own experiences. In ascending order now, from the worst to best performers in my portfolio this month. First off, the worst performer this month is HSBC in the financial sector. This comes as no surprise given the current banking crisis. HSBC is down a massive 14.2% this month, but still up 3.9% over the last 12. HSBC pays a dividend of 4% at its current price. Aviva next suffering pretty heavy losses at 9.7%. Although Aviva is not a banking stock, it does still belong to the financial sector, which has been affected as a whole by the recent issues. There is a lot of fear in the markets right now, but I'm confident Aviva will still be around 10 years from now, so I'm not concerned. Aviva is now paying a very solid 6.2% dividend, which is paid out twice a year. A new purchase this month was Legal & General, which is also in the financial sector, hence the 7.1% loss. Legal & General are a financial services provider that offer life insurance, pensions, retirement and investment services. Just like with Aviva, I'm confident Legal & General will still be around 10 years from now, so I've used the current panic in the markets to buy in at a lower price. As the man himself says, be greedy when others are fearful, and fearful when others are greedy. Legal & General offers a whopping 8.1% dividend, which despite being very high is well covered and should be sustainable. Next up is the Vanguard All-World High Dividend ETF. This ETF contains over 1,800 stocks from around the world, so it offers plenty of diversification. However, the financial sector is heavily weighted, making up around 25% of the 1,800 companies contained within this ETF. That being said, it's no surprise that it's also suffered losses this month. VHYL is down 3.7% this month and 2.5% over the last year. VHYL also pays a dividend of 3.7% quarterly. Now for the iShares Core FTSE 100 ETF, which mirrors the performance of the FTSE 100 index as a whole. Due to the fact the FTSE 100 index is also weighted quite heavily towards financials, it's also taken a hit this month, down 3.3%. That being said, it was down significantly further earlier in the month, at which point I seized the opportunity to add another 54 shares to my position. Given this recent downturn, the FTSE 100 is pretty much back where it was a year ago. The iShares Core FTSE 100 ETF pays a dividend of 3.6% on a quarterly basis. Onto the gainers now, starting off with GSK, which is a global giant in the healthcare sector. GSK saw some marginal growth up 0.5% this month. GSK pays a quarterly dividend of 4% and is down 14.6% in the last 12 months. Unilever in the consumer staples sector is up by a small margin this month at 1.4%. However, if you'd held Unilever for the last 12 months, you'd have enjoyed a solid gain of 19.6%. Unilever has a dividend yield of 3.6%, which is about the same as the index average. Although Unilever's growth has levelled off since 2019, I still believe this to be an excellent stock to own and that it has a bright future ahead due to its sheer size and ability to buy up the competition, which creates what's known as an economic moat. I plan to add more to this position in the near future. Bluefield Solar is an investment fund that's involved with renewable energy. With many government targets aimed at reducing carbon emissions in place, renewable energy seems like a good place to invest over the long term. In addition to this, Bluefield Solar has a dividend of 6%, which is just under 2 times the index average. Bluefield Solar is up 1.5% this month, which brings its 1-year gains to 5.7%. Diageo next, which is an alcoholic beverage company that owns some huge brands such as Johnnie Walker, Smirnoff, Ciroc, Captain Morgan, Baileys and Guinness to name a few, and it's up by 2.7% this month. Diageo has seen steady and consistent growth over the past couple of decades and has grown by 45% or so in the last 5 years alone, compared to the FTSE 100's growth of around 10% in the same period. Diageo has a relatively low dividend of 2.2%, but as you can see on the chart, it's also grown its dividend every single year since at least 2000 by an average of 6.4%. Diageo is down 6.6% over the last 12 months. Tesco, now in the consumer staples sector, is up 5.7% this month. Tesco currently has a dividend of 4.3%, which is paid out twice per year. Tesco is still my best performer of all time, having gained around 27% since purchase. That being said, Tesco is still down 4.7% on the 1-year time frame. National Grid in the utilities sector is my best performer this month, up 7.8%, however it's still down 5.7% on the year. National Grid currently offers a solid 4.7% dividend. Just like Diageo, National Grid has a long history of reliable payments, as well as consistent dividend increases. Here you can see each individual stock's performance, from best to worst, in a nice, easy to read and more visual format. You can really get a feel for how the financial sector has put a lot of downward pressure on the market, as well as my portfolio this month. Here's a look at the performance of the sectors. This is based on the stocks I own in the sector and not the sectors as a whole. Utilities clearly out in front thanks to National Grid. On to sector weighting now. My recent purchase of Legal & General in the financial sector has brought the sector's weighting within my portfolio to be on a par with consumer staples, which had previously dominated. The iShares Core FTSE 100 ETF purchase I made this month has also increased the ETF's weighting somewhat. I plan to continue increasing my ETF holdings until they make up around 50% of my portfolio. It's really not easy to beat the market's returns over the long term, so my thinking is that if I have 50% of my portfolio invested in index-based ETFs, then at least half of my portfolio will be in line with the market. I can then try to beat the market with the other half, but only time will tell whether I'm able to do so. ISF is now my largest holding by a whisker due to my recent addition. However, all of my holdings are of a fairly similar size at this point, due to the fact I tend to invest around £500 at a time. I did this mainly to save on commissions. However, I would prefer to invest smaller, more frequent amounts. That being said, I'm getting close to the maximum amount of companies I'd like to own now. I think around 15 will be my limit, not including ETFs, as they don't really take any management. Once I reach this point, I'll start adding more heavily to my favourites, and the gaps in size will grow. I like to try and keep around 5% of my portfolio in cash to snap up bargains when they come along. Honestly though, so far I don't think I've managed to hit 5% once. I know I'll kick myself next time there's a big dip, and I don't have any cash on hand to take advantage of it, so I'll keep working on that going forward. This month I added a total of £871 to the account. I aim to add around £1,000 per month for the time being, plus 100% of the income generated by this channel once I get to that point. The account lost £40 in real terms once you subtract the money that was added, which isn't too bad considering the current situation with the banks. The loss was significantly higher at one point, but thankfully it's recovered some since then. The portfolio grew by a little less than usual this month, so it didn't quite reach the 6k mark. However, failing some sort of big market drop, I'm sure I'll surpass the 7k mark next month. I received £16 in tax-free dividend income this month, which as you can see is my first double-digit dividend. It's not much, but it's a solid step in the right direction. I know that next month's dividends will be higher again, so I feel like I'm starting to see some real progress now. After all, The dividend income is why I'm doing this in the first place, so seeing it grow is what excites me the most. Now for the all-time performance of the portfolio. So far, I've added a total of £5,670 of my own money to the account. I've made £162 in capital gains and a total of £24 in dividend income at this point. The portfolio value currently stands at £5,852, which means my total return on investment so far is 3.2%. Keep in mind that I drip feed new money into the account each month, and had I invested that total amount in one lump sum at the start, the ROI would be significantly higher. Thank you for watching. If you have any questions, please feel free to ask in the comments below, and I will do my best to answer them. Check back soon for next month's dividend reveal.